Hi, this is John with the Shark Tech channel. Welcome to watch my video. Hope you enjoy. In this video, I would like to share with you something about how to draw trend lines and how to trade trend lines. So if you understand the direction of a market by using trend line, then you are able to increase the probability of making a successful trade because it ensures that the general market forces are working in your favor. Trendline can be used for trading of stocks, options, forex, commodities, futures, etc. for any time frame. It can be used by short-term swing trader, day trader, and even long-term position trader. So I will mainly focus on swing trade and use 1 to 2 years time frame to explain chart technical analysis in stock market. So let's see the points for today. There are 4 points I would like to share with you. Number 1, what is a trend line? Number 2, how to draw and trade a trend line. And number 3, pay attention to breakouts. Number 4, preparing a trading plan before you trade. So number 1, what is a trend line? A trend line is a line connecting at least 2 swing points of highs or lows to show direction of price. And trend line also tell us the support and resistance levels in any time frame of price movement. And also trend line to forecast the probability of a market reversal, like the trend line breakouts. Let's see some pictures to get to know the very basic function of the trend line. Okay, I have put HH and HL in the chart. HA means the higher high, HL means higher lows. So if we connect two higher lows here, right in here, the red circle means a support level, and then we could get this trend line. And the blue circle means a breakout, and the green circle means a resistance level. So you can see when the price is above this trend line, then we could call here is the support level. And when the price is going under this trend line, and then we could call here the green circle is the resistance level. Okay, let's see how the price goes. So the price firstly goes up and down here to test this trend line, and then it goes up again and down again and test to hit this trend line again. And then it goes up, but this time it comes down and it breaks the trend line. Here is a breakout, and then going down and then get a retracement here and hit this trend line, and we call here is a resistance level, and then the price goes down. Okay, and then next is a downtrend. So the same thing, I put it in the LH and the LL in the chart. LH right in here, it means the lower highs, and LL means the lower lows. So if we connect the two lower highs, and then we could get this trend line. And let's see how the price goes. So the price firstly coming down here, then it goes up, and then it coming down, and it goes up again, and going down. But this time it goes up, and it breaks the trend line. Here's a breakout here, and then it get a little bit pullback here, and then it goes up. So red circle here means it changed to support level because the price goes up after the breakup. Number 2, how to draw and trade trend lines. 3 points here. First one, draw and trade single trend line. Number 2, draw and trade double trend line. Here means channel. Number 3, draw and trade triple trend lines. Here means a fan pattern. Firstly, we are going to see how to draw single trend lines. Step 1. So first, we are going to look for swing lows and swing highs. So you can see here, first we see A and B are 2 swing lows, which are support levels. So we just draw them together, and we could get this uptrend lines like this. And then we see another trend line C and D, which are another 2 swing highs and also resistance levels. And we draw them together, we could get this downtrend line this way. And then we see another trend line, which is the C and E, and we draw them together, you could get a sideways trend lines. So C and E are another two swing highs and also the two resistance levels. And finally, we see another trend line, F and G. They are two swing highs and also resistance levels. We connected these two swing highs, and then we could get a downtrend line like this. So this is the very basic way to draw trend lines. So please do it yourself and practice more. Then we'll see how to treat single trend lines. This is an example. Okay, so first step, we are going to look for the support levels and the resistance levels on this chart. Okay, and then we draw the trend line, and afterwards we try to find out the chance to trade. Okay, let's start from this point. So A, you can see, is a support level, and then we just try to see here is a breakout, and then after the breakout there are 3 times of test of the resistance line, 1, 2, and 3, and we draw this line through A, and we get this uptrend line, and then we try to find out the chance to trade. So let's see the setup. Now just put the setup right in here, so you can see here the steps for trading a single trend line. Step 1, just to draw the trend line and to check the support level A. Yeah, it's a support level. And number 2, check there are any signs to show the price, if the price is going up. Yeah, we find out that there are 4 morning star candlesticks. You can see very small, but you can see there. This is a very, very important sign for the price to going up. So this is a very important sign for candlesticks as well. I will let you know more about the techniques of using candlesticks later on. And then we'll see step 3, check the moving average. See, I'm always using the moving average of 5 days and 25 days. So you can see 25 days is very important. Yeah, it is really supporting. You can see the purple line is a 25, it's a supporting. And then step 4, check if the volume is going up. You can see just to move, okay, you see down here, here's the B is the volume. Yeah, it's increasing. And then step 5, we check MACD. This is a very important indicator we should use to check if it crosses above 0 or not. Yes, it is. You can see C, it's above 0. And then step 6, this is the final stage for us to find out the chance to trade. Okay, so we get everything all set, and then we could do a test buy right in here at A, right in here. And then we'll place a stop loss under the support line. Remember, my friend, stop loss is very important for you to do trade. So a lot of the traders, they don't place a stop loss. And then they, most of them failed to make money. So you must place a stop loss when you do each trade. And then we'll use a trend line to find out the place we'll exit this trade. So you can see D is the place we are going to sell. You can see this is the trend line, and this is the breakout of the trend line. And this is the best chance for us to sell. Now we are going to master how to draw channel trend line. So first, this is an uptrend, you can see, and we just draw a single trend line of low swing points, and then draw another upper trend line, which is parallel to each other. So you can see this is the lower line, and A and C are 2 support levels. And we draw them together, could get the lower line first. And then we just draw the upper line, which is parallel to each other. You can make a copy of A, C line and just put it on the top of B, and you could get this channel. So most of the softwares, the channel tools. So it is very easier for you to use the channel tools to draw channel trend lines. If you don't have that software, you can use it this way. First, you draw the lower line, and then you make a copy of the lower line, and you just move it right up to the swing highs. That means the resistance level as B, and you could get this channel trend line. Okay, so I will show you more channels on next chart. Okay, let's see how to trade uptrend channel. So first, we are going to see where are the support levels and resistance levels. Okay, we look for this. Here is the support 1, and here's the support 2. And here's a swing high, which is the resistance level. Okay, if we get these 3 points, and then we could draw the uptrend channel. We just get them together. Okay, we draw the lower line first and get them together. And then we draw the second. So remember, the 2 lines are parallel to each other. So if we get to the lower line, and then we could get to the upper line. So the lower line is the swing low, higher line is swing highs. So this is the basic way for draw the channels. And let's see how to trade. So you can see the price is just going between the 2 lines. And then, for example, it's going up right here, touch this line. This is just for example. You can buy here, and can sell here, okay? But, well, I think it is very easy for you to understand the basic way to trade, but it's hard to trade, in fact, because sometimes, or most of the times, the prices cannot reach the lines. For example, right in here, you can see here, there is a gap here. That means the price is going up here, and there is a gap. That means the price did not touch this line. The price is, the market forces is becoming weak, and the price is going down again. So if you buy here, and then you want to sell here, then it's impossible. You will lose the chances to trade, or you have to wait for more time to wait the price to hit this line at this point. So to solve this problem, I'm just using the support zone and resistance zones to help us easier, to trade easier. Okay, so let's see how to do this. You can see the red line. I draw this line just using the swing lows here. You can see the swing lows right in here. So the black one, the black lower line is already there. I just make another copy, which is parallel to this black line, using the high price of this swing low, okay, and get this support zone. The same thing, we could get the resistance zone using the same way. We're just using this swing high. You can see here, the upper line, the black line is already there. We just make a copy of this line and get this red line using the lower price of this swing high. And we could get this resistance zone. Okay, so when the price is going into this zone, support zone and resistance zone, and you should be ready to trade because the trading chance is coming to you. You should get ready. Okay, let's see an example. The prices is coming down here. You can see coming down here to touch the line, the black line, that means the lower line, and then goes up again. You can buy right in here. This is a small pullback. You can buy here. And then where can you sell? So this is a question. You can sell here, just wait here. This is a gap because the price did not touch the upper line, okay? And then you use this resistance zone because you can see here, the price has already entered this zone. You can sell here. You can sell here. And you can complete this trade. So this is the basic way for you to trade the channel. I will show you more examples. Okay, so this is another example for trade channels, which is a downtrend. Okay, the same way that firstly we will see where are the support levels and resistance levels. and then we draw them together to get the trend first. Okay, so this time we just start from the upper line. You can see here is a resistance line. Here's another resistance. We connect them together, get this line. And then we just make a copy of this line and get the lower line this way. And here is a support level. And then we'll draw the resistance zone and the support zone using the same way. Okay, here is the resistance zone and here is the support zone. And then if we draw these zones, that will be easier for us to find out the chances to trade channels. Okay, so for example, when the prices is coming down here and enter into the support zones, then you should be ready to prepare your trade. For example, you can buy here, and then when the price is going up and enter the resistance zone, you just sell right in here. Another example, when the prices are coming down again to enter the support zone again, can buy here, and then sell when the prices enter the resistance zone, can show here. So there is no need for you to wait the price to hit this upper line. No, just sell here. So it's a little bit conservative, but I think it will be easier for you to trade this way. Let's see what can channel trendline tell us. Here on this chart, there are 5 channels. Channel 1, 2, 3, 4, and 5. Channel 1 you can see is a downtrend, and channel 2 sideways, and channel 3 and channel 4 are uptrend lines, and channel 5 is downtrend. So from channel 1 and channel 2, you can see a very important point is that the market is changing from bearish to bullish. At this channel number 1 and number 2, I think you should notice the first point is about the lower levels, which are support levels, the lower prices. The gap between the price and lines is getting bigger and bigger. You can see 3 circles here. That means the market is getting stronger and stronger. And then at channel 2, you can see right here is a big gap, and then the market is moving up. And then number 3, this is a number 3 channel, is a big channel, and then the market is moving up. And then number 4 channel, you can see the swing highs cannot reach the previous upper line of channel number 3. That means the market is changing from strong market to weak market. So this is a sign that we should notice. And then from a number 4 channel to number 5, that means the market is changing from the bullish market to bearish again to, number 5 channel is a downward. Okay, so what can channel tell us? So number 1, I think a channel can identify the direction of price movement. And number 2, channel can give us a very clear picture showing the momentum of the price movement. So we have to learn how to feel the momentum changes more from this chart. So that means when the market is getting stronger and when the market is getting weaker. So if we understand this point, then that will be easier for us to find the trading chances. This is an example for trading channel. I put 2 channels on this chart. Here is channel number 1, and here is the channel number 2. So you could see channel number 1 is a downtrend, and channel number 2 is a sideways. So you can see the price movement changes from channel number 1 to channel number 2. That means the market is changing from bearish to bullish. Okay, so let's see the setup. I just prepared the steps for trading this channel. So step 1, check channel number 2 is a turning point from bearish to bullish market. And then wait for a channel breakout at A. So A is a big gap occurred there. And then step 3, we just check if a moving average is supporting. Yes, so the price is above moving average. It is supporting. And then step 4, check if volume is going up. Let's see B. Yeah, it is going up. And then step 5, check if MACD crosses above 0. Yes, you can see C. It crosses above 0. And then step 6, this is the last step. So we just try to buy, find a place to buy at the pullback. You can see here is the pullback. And then place a stop loss just under the upper level of the channel number 2, right in here. And then sell at D. You can see here, I just draw a trend line and then find a breakout. And then I put it at D. You can see D is a good place for you to close this trade. Let's see how to draw a triple uptrend line, which is a fan pattern. Okay, so we should start from A and then connect other swing lows, which are support levels, and then we could get the trend line. Okay, so for example, we draw A and B, and then we could get line 1. And then we draw A and C, could get line 2. And then we draw A and D, then we could get line 3. Then we could get this fan pattern. So B, C, and D are supporting levels. And you can see the different places of breakout. You can see here is a breakout. And here's one more breakout. And on line 3, the breakout is very important. You can see here, it's at E. This is a very important breakout. So you should notice. So what can uptrend fan pattern tell? I think this pattern can tell us the price movement direction might change probably, and the market is likely to reverse. This time we'll draw triple downtrend. Okay, so we start from A, and then we connect B, C, and D of these 3 resistance levels, and then we could get line A, line 1, and line 2, and line 3. And then we could also see several breakouts here. So this is number 1, and this is number 2, and this is number 3 breakouts. So you should pay attention to any breakouts on the line 3. That's very important. So this pattern tells us the price movement direction might change probably, and the market is likely to reverse. So we could see the market after breakout is going up this way. This is an example for trading triple trend line, which is the fan pattern. Let's see the steps for trading this example. Step 1, just draw 3 lines to look for a reversal opportunity. So this is line 1, line 2, and line 3. It's done. And then step 2, wait for any breakout on line 3. Here you can see at A, a breakout happened there. And then check if there are any candlestick signs which shows the price will be going up. Yeah, you can see there is a bullish engulfing. This one shows the market might be going up. And then step 4, check if volume is supporting. Yes, volume is increasing. And then check MACD. Yeah, it crosses above 0. And then we could try to find out a place to buy. So you can try to buy at this small pullback here, and then place a stop loss right under the support line of S1. And then the price is going up, and then you could find a place to close your trade by using another support line. I call it S2. So you can see here it's a breakout. The line is broken, and then I think you can close your trade right in here. Number 3, pay attention to breakouts. 2 points here. First one, to master how to distinguish valid breakouts and fakeouts by using volume indicator and candlesticks. And second point is breakouts with lower or decreasing volume are likely to be fakeouts. Okay, so this is in a chart showing how to distinguish valid breakouts and fakeouts. So I'm usually using volume and candlesticks to verify if they are valid breakouts or fakeouts. So you can see this chart shows a channel, and A, B, and C are 3 breakouts. So first we see A is a valid breakout because it is filled with high increasing volume and morning star candlesticks and gapping up. You can see here volume is increasing, and then morning star candlestick is available there, and also a big gap here. And then B and C are false breakouts because the volume is staying low here. You can see here it's very low. And the candlestick shows the 3 black crows. That means the market is likely to reverse. So you can see these and these are two very important signs of a candlesticks showing the market will be reversing. Okay, number 4, preparing a trading plan before you trade. So 2 points here, and first point is why should we have a trading plan? So a trading plan is a set of trading rules that guides your trading behavior. So including your setup based on technical analysis, entry price, and target exit price, and a stop loss. Here, stop loss means you should make a good risk management or money management. So no trading plan is one of the main reasons why most traders fail to make money. And the second point is about taking a note. So after trading, you'd better take a note to summarize your trade result, no matter it is a successful trade or not. So this note will help you improve your trading skills. Now here, one point is to remember, so executing a stop loss and taking a note are quite necessary for you to become a pro trader. Coming up next, okay, let's have a quick recap for today. We have mastered how to draw trend lines and how to trade trend lines, single, double, that means channel, and triple, that means a fan pattern. And then we have mastered how to distinguish the valid breakouts and fakeouts. And finally, we learned that making a trading plan before you trade is very, very important. So please remember this and do this before you trade. Okay, thank you so much for watching today. If you have any questions, please send me a note and let me know. And if you enjoyed this video, please hit the thumbs up button and subscribe to my channel. So in my next video, I will share with you something about how to trade reversal patterns. Thank you again and good luck, my friends. See you next time.